Look at Warren Buffett. I mean, he's been dumping shares and liquidating, and a bunch of other big investors have been dumping real estate. And BlackRock's trying to get out of real estate. They own like half of America's real estate, and they're selling properties at a loss. I think they see the end is coming, and nobody wants to talk about it. Nobody wants to spark the awareness because those big players, I think they're just covering it all up. I think the market is on the verge of a huge collapse.
You're watching Silver News Daily. Subscribe for more.
Imagine waking up to headlines of a financial apocalypse, markets collapsing, assets vanishing, and the safety nets of yesterday crumbling before your eyes. According to Chris Vermeulen, that day might be closer than you think. With silver poised to plummet alongside a historic market downturn, the question isn't if it will happen, but how prepared you are when it does. Stay with us because what you'll learn today could redefine your investment strategy forever.
I'm still bearish on the markets. I think we're waiting. I think the market is kind of waiting to see what Trump is going to do. There was news out talking about Trump maybe not doing as much of the tariffs or as big as tariffs, or selecting a smaller group of different resources and products to slap taxes on. So that's kind of creating a little bit of a move in the market and creating a little bit of a pop just this week. But overall, I'm still bearish on the market, and I think January is going to be the major barometer. Typically, how January closes, positive or negative, is how the rest of the year is going to go. So if we have a strong close, we might have a very interesting first presidential kind of cycle rally. But if the January closes weak, we tend to see the stock market struggle and close lower on the year, which is what I'm favoring. I think there's a lot of uncertainty. I think there's a lot of fears with tariffs and just a new president stepping in the situation we're in, that I think things are going to sell off. So I think people need to be aware that this market is very sector driven. The semiconductors have actually been kind of really taking a back seat. When you look at the Magnificent Seven, they haven't really been rallying, and the semiconductor sector on its own has been really flatlining. So I feel like there's definitely been a stall out in that momentum of the AI and the semiconductor space driving this market higher. And it's going to be very interesting. I think we got NVIDIA coming out with a speech from the CEO. So that's probably going to, probably move the markets as well.
The financial world is entering uncharted territory, and the signs are impossible to ignore. Global markets are being pulled in opposing directions by a combination of factors, each more volatile than the last. In the U.S., a new administration brings with it sweeping changes in trade, fiscal, and regulatory policies, all of which could profoundly impact economic stability. Meanwhile, central banks worldwide are shifting from a period of aggressive tightening to cautious monetary easing. This divergence in policy is creating ripples across every asset class, from equities to precious metals. Let's not forget inflation. While many hoped it would stabilize, the reality is far more complex. In the U.S., new tariffs and immigration policies are expected to drive costs higher, while in Europe and the U.K., persistent growth challenges add layers of uncertainty. J.P. Morgan's top strategists warn that the global economy could face higher for longer inflation, with central banks unable to ease rates as much as anticipated. These dynamics are leaving markets fragile and investors anxious. Adding fuel to the fire is geopolitical instability. Rising tensions between major economies like the U.S. and China are spurring fears of trade wars, further complicating an already delicate economic picture. In this context, investors are seeking safe havens, but even those havens, like gold and silver, are not immune to turbulence. Silver, often seen as a dual-purpose asset, a commodity and a hedge against inflation, is particularly vulnerable. While it performed strongly in 2024, hitting record highs, analysts now predict a sharp correction as markets enter a phase of heightened volatility. Why? Because silver is deeply tied to industrial demand, which suffers in economic slowdowns, and its volatility makes it a prime target for panic selling when fear grips the market. In short, the stage is set for one of the most unpredictable years in modern financial history. Economic pressures, policy shifts, and global uncertainty are aligning to create what Chris Vermeulen describes as the perfect storm. But what does this mean for silver, and how can you protect yourself? Keep watching as we unpack the warning signs and investment strategies that could help you weather the storm ahead.
Sure. Yeah, well, if we take a look at the charts here, we've got the chart of the SP 500. So I believe we're coming into a fairly major market topping scenario. In fact, when we look at the big picture and look under the hood of the markets, what we're seeing right now in the overall stock market over the last few months have been weakening. Kind of different commodities and assets have been performing better than the stock market. People are nervous. We've seen gold hit 100% measured move based on a long-term chart you and I have talked about before when we look at the monthly chart. And gold since then has pulled back with some big selling. I think GLD, the gold ETF, had some of the biggest monthly outflows, huge outflows, I think, in December over the past 2 months. So definitely, I think there's a lot of things coming together. When we look at the big macro picture, I think the economy is slowly coming to a grind. It's slowing, it's easing, hasn't fully stalled out yet, but I think that's coming. And what we're seeing in the stock market right now in terms of the last several months, from a chart standpoint and also kind of economic data, is kind of things are slowing down, similar to what we saw just before the 2022 bear market phase. So that coupled with gold hitting its 100% measured move now, energy stocks have been dramatically outperforming, especially compared to the price of oil, which has been going down. Energy stocks have been going up, but now we've seen energy really come to a grinding halt. Stocks have fallen hard. Dividend stocks are selling off. When dividend stocks are really selling off, that's like mass psychology. That is most retirees and investors who hold most of those big stocks, those companies, they're starting to unload those portfolios. And so there's a lot of things coming together that are just saying, hey, this market is coming to a grinding halt. And I think we just need to let January play out. To me, it's like, let's see what January does. Trump's going to be in now, and that's going to create a big bunch of volatility, probably a big pop and a drop and all that stuff. But with gold hitting...
The warning signs of an impending market collapse are stacking up, and they're impossible to ignore. Seasoned investors like Warren Buffett and major institutions such as BlackRock are taking decisive action, selling off assets at significant losses, a move that speaks volumes. When these financial heavyweights start unloading stocks and real estate, it signals a lack of confidence in the stability of the market. BlackRock, for instance, has been liquidating real estate holdings, even at a loss, which some experts suggest is a desperate move to prepare for a downturn they see on the horizon. From a technical perspective, Chris Vermeulen points to critical market indicators like the 100% measured move, a pattern in which an asset completes a major price rally and stalls. Both the stock market and gold have recently hit their measured move targets, aligning with historical patterns that often precede significant corrections. It's as if the markets are taking a collective breath before the storm hits. Adding to the ominous picture are macroeconomic signals. Data shows that the U.S. economy is slowing, with real estate markets weakening under the weight of unsold homes and declining values. At the same time, consumer spending is faltering, a trend that typically marks the final stages of a business cycle before a downturn. The industrial sector isn't faring much better. Semiconductors, which were once the darlings of the market, are now stagnating. With AI-driven investments cooling off and global demand waning, the cracks are beginning to show in what was once a cornerstone of economic growth. Then there's the matter of silver itself. Historically, silver has been one of the most volatile assets, prone to sharp movements during periods of market stress. Unlike gold, which tends to hold its value better in downturns, silver often falls victim to panic selling, driving its price down significantly. Chris Vermeulen predicts that silver could drop to the $22, $24 range, a stark contrast to its highs of 2024. All of these factors point to one conclusion: the markets are standing on the edge of a precipice. The question is no longer if there will be a downturn, but how severe it will be and how it will impact investors like you. With silver caught in the crosshairs of this looming collapse, understanding the risks and potential opportunities is more critical than ever. So, what does this mean for your investments, and how should you navigate the uncertainty? Let's dive deeper into silver's unique role in this unfolding crisis.
It's 100% measured move. The stock market also hitting. So let's take a look at this quick, Elijah, because this is a really good visual of where the stock market lies. And the SP 500 has done the same as gold. So if we were to just take a look at the SP 500 monthly chart, we have the COVID low, and then we have the high from the top of the 2022 bear market, and then we go to this low. If we carry that forward, now this is a Fibonacci extension, and this is like the most powerful tool. I'm actually going to be doing a video on this on my YouTube channel. Based on the move up and the strength of the pullback, it tells us where the next two upside targets are. If we come up to this 618, which you and I have talked about before, Elijah, usually we see a pause. And if we have a pause there, we almost always go up and hit the 100% measured move. The stock market has now done that. If we flip over to the chart of gold, gold has done the exact same thing. If we go back to the beginning of the last major super cycle and draw a Fibonacci on the monthly chart, we have the same thing. We have the high in 2011, the low in 2015. We carry that forward. Gold has hit the 618. It had a multi-year pause, very similar to what it had over here. It was a multi-year pause. And then it's taken off and outperformed the markets and hit that 100% measured move, just like it did just before the 2008 financial crisis. Gold is the global barometer telling us the world is nervous. They're getting out of stocks, real estate, other currencies and things like that, and they're moving into a physical asset kind of outside of the financial system. So those are kind of the reasons why I think we're starting to see things really top out and why most of the upside is done. The market could go a little bit higher, but I don't see it as like a new investment signal and something with a lot of power behind it. It'll just be a small rally, I think, to get people maybe excited about higher pricing, and the institutions will sell into this. And we've seen lots of institutional selling into the buying, and they're unloading their portfolios to the general public who are very bullish right now, which we've seen all the ARK ETFs and all the small caps and micro cap stocks starting to come to life. So people are piling into the most volatile stuff right at a market high. That's another sign we need to be aware of.
Silver stands at crossroads. Its dual identity as a commodity and a store of value makes it a critical player in times of economic uncertainty. But that same duality is also the source of its volatility, and as the markets teeter on the edge, silver's future looks more unpredictable than ever. Historically, silver's price movements have been more extreme than gold's, largely because of its industrial applications. Approximately 50% of silver demand comes from industries such as electronics, solar energy, and medical equipment. When economies slow down, industrial production takes a hit, dragging silver prices with it. In a market collapse scenario, this industrial linkage could turn silver into a liability for investors rather than a hedge. Moreover, silver's smaller market compared to gold makes it more susceptible to rapid price changes. Large-scale buying or selling by institutions can send shockwaves through silver's price, and during times of panic, the metal often experiences significant sell-offs as investors liquidate positions or losses elsewhere. Chris Vermeulen predicts that silver's price could drop to the $22-$24 range in the near term, a sharp decline from its highs of $35 in 2024. This potential plummet is tied not only to weakening industrial demand, but also to broader financial instability. If the stock market collapses as insiders warn, the liquidity crisis could drive investors to sell even their safe haven assets, including silver, to meet margin calls or maintain cash reserves. However, silver isn't just a commodity. It's also a hedge against inflation and currency devaluation. Many investors hold physical silver as a safeguard against the erosion of purchasing power. Yet, view in this role comes under threat during market turmoil. In a widespread sell-off, the need for liquidity often overrides the perceived safety of precious metals, causing silver to lose ground alongside riskier assets. Still, it's not all bad news. Historically, silver has shown remarkable resilience after periods of steep declines. Once the dust settles, the metal's dual role could transform from a liability into an advantage, as investors flock to it for its inflation-hedging properties and its long-term potential for growth. In this volatile environment, The question isn't just about whether silver will drop. It's about how investors can use its inevitable oscillations to their advantage. Should you sell now to avoid potential losses, or is this a rare opportunity to buy into silver at discounted prices? As we examine the broader context, we'll explore whether silver's short-term pain could pave the way for long-term gain.
I think it comes down to just overall money flow. When things start to sell and fall, people have margin calls. When people get nervous, they start to sell stuff if they're going down. And really, it's just kind of the market starts to fall and people start to sell. And the more it falls, the more people get nervous, the more people sell positions. It could buck the trend, but the market always feels like every time the stock market puts in a major bear market, that, precious metals should take off. The ultimate story for precious metals is always there. The problem is when there is mass selling globally and people have to liquidate and they're struggling financially and they need to sell investments for living or for keeping their business going, investments go down. Almost everything kind of gets pulled down. So I don't really think it'll buck the trend. And I think Bitcoin will probably be the same. I think people will eventually gold, I believe, is a currency, a type of currency. Bitcoin is a type of currency. I think they could move up for maybe a month or two and maybe hold up in value while the stock market struggles. But I think once we get into the bear market and the stock market really sells off, I think we'll see gold and silver, as you and I have talked about before, pull back for several months, probably Bitcoin as well. And then they'll reset and then they'll have a new opportunity. They will have the ultimate opportunity, kind of just like after the last bear market. Once the forced liquidation and fear dissipates, then they're going to take off and be the leaders as a safe haven type of play.
Now, if we do look back at 2008, it looks like it really went back to that, those highs, kind of the price was bumping up against previously. So if that was to happen again, it looks like we might be around the 2000 level for gold again.
Yeah, it's possible. It could be, a 20% pullback in gold and bring us back down to this level fairly easily, I think. I know people don't want to hear that, but it would probably be a fairly quick, swift drop and then have a knee-jerk reaction bounce and the start of a new rally. It's kind of what happened back over here. It's hard to see, but there was one super strong month that went straight down and crashed. And then the next month was a knee-jerk reaction and then it took off. So it'll most likely be something like that is my expectations. But yeah, there's quite a bit of potential here. Gold may hold its ground fairly well. It might actually just trade sideways and it could hold up very well and create a bull flag pattern, which is you have a rally and then you have this bull flag and then the second half of the move takes off, to 3,500 or so from here. So all I'm saying is gold. I think the main move in gold and stocks are done. The monthly charts have said, hey, we've hit our measured move. It's time for at least a pause, if not a major pullback. And so people just need to be aware that, hey, weakness is not a bad thing. It's just, you have to understand it's probably going to happen. And it's an opportunity to the downside. It's an opportunity to rebuy later at a better price. So it should be seen as a positive thing if you can understand how to view it and trade it.
While the short-term outlook for silver seems fraught with risk, there's another side of the story. One that highlights silver's potential as a beacon of opportunity amid economic chaos. For every bearish analyst predicting a sharp decline, there are others who believe that silver's unique properties make it an indispensable asset for long-term security. To understand this dichotomy, we need to examine silver's dual role. On one hand, its industrial ties make it vulnerable to economic slowdowns. As demand for electronics, solar panels, and medical devices wanes, silver's price tends to drop sharply. But on the other hand, silver's status as a store of value and hedge against inflation gives it enduring appeal in times of crisis. Historically, silver has outperformed most other assets during periods of prolonged inflation or currency devaluation. Take the 2008 financial crisis as an example. Silver initially dropped alongside other assets in the liquidity crunch, but as markets began to stabilize, it staged a dramatic recovery, eventually hitting new highs. This pattern reflects a key dynamic. In the immediate aftermath of a collapse, panic selling often drives silver prices down, but as confidence returns, so does demand for silver as a safe haven asset. Chris Vermeulen's forecast of silver potentially fall into the $22–24 range aligns with the short-term bearish view. Yet other experts argue that such a drop could create a once-in-a-lifetime buying opportunity. For those willing to endure short-term volatility, the payoff could be substantial. Silver's scarcity, coupled with its rising use in green technologies like solar energy, suggests that its long-term trajectory remains bullish despite immediate challenges. Additionally, central banks worldwide are stockpiling gold as a hedge against global uncertainty. While silver isn't held by central banks to the same extent, this trend underscores a broader flight to precious metals during turbulent times. Retail investors often follow suit, gravitating towards silver for its affordability compared to gold. However, there's a crucial caveat. Timing is everything. Buying too soon could expose investors to further losses if the predicted market collapse materializes, while waiting too long risks missing out on silver's eventual rebound. This delicate balance leaves investors with a challenging decision. Play it safe and wait for more clarity, or take the risk and position yourself for potential long-term gains. This split in perspectives underscores the inherent complexity of the silver market. Is silver poised for a dramatic recovery after the dust settles, or will its industrial ties drag it down further? The answer lies in how you interpret the data and your tolerance for risk. As we continue, we'll examine historical patterns and investor strategies that could offer valuable guidance in navigating these uncertain times.
I would probably expect silver to probably fall somewhere back down into this consolidation. There could be a couple support trend lines. So it could fall back down to 23, 22, somewhere in that range, 24. That's going to be a pretty critical level. I think somewhere in that 22 to 24 range. So it would pull back. I'd like to think it's not going to break down through this, but the market, when there's panic selling, silver is very volatile. We kind of had the same over here. We had lows over here in the 2008 bear market. It crashed and pierced right through it, and then spooked the market, and then it took off. So it could very easily pull back much deeper. Silver pulled back over 60% last time. It could pierce down and drop down to the 2018 mark, and then have some crazy reversal to the upside. It's going to want to probably shake out this low or this low over here, trigger those stops and make everybody get out. And then, of course, it'll go the opposite direction once most people spook.
To predict silver's path forward, we must first look back at how it has performed during past market crises. History has a way of repeating itself, and the patterns we've seen in previous downturns could provide valuable insights into what lies ahead. Let's start with the 2008 financial crisis. When the global economy teetered on the edge of collapse, silver wasn't spared. Its price initially plunged by nearly 50%, falling from around $20 per ounce to just over $9. This dramatic drop was driven by a liquidity crunch, as panicked investors sold off assets across the board to raise cash. But what happened next was remarkable. As markets began to stabilize and central banks pumped liquidity into the system, silver staged a spectacular recovery, eventually reaching new highs of nearly $50 per ounce in 2011. A similar pattern emerged during the COVID-19 pandemic in 2020. Silver saw an initial drop from $18 to $12 per ounce in March, but within months it rebounded sharply, climbing to $28 by August of the same year. This rapid recovery was fueled by a combination of factors: increased demand for safe haven assets, government stimulus measures, and renewed industrial demand, particularly for green technologies. These historical parallels reveal a critical truth about silver. It often mirrors the broader market during times of crisis, falling alongside stocks and other assets. But its recovery tends to be stronger and faster than most, driven by its dual appeal as a safe haven and an industrial metal. However, there are nuances to consider. Unlike gold, which is primarily a monetary asset, silver's industrial ties make it more sensitive to economic slowdowns. This means that while silver has the potential for explosive growth during a recovery, Its path to that recovery is often more volatile. Investors must be prepared for sharp swings in both directions. What's different this time? Experts like Chris Vermeulen argue that the current setup is eerily similar to the lead-up to the 2008 collapse. Institutional selling, declining consumer confidence, and an overextended stock market are all flashing warning signs. If history is any guide, silver could see a steep decline in the short term, potentially falling to the $22, $24 range as Vermeulen predicts. But once the initial shock subsides, the conditions for a silver rebound, low interest rates, inflationary pressures, and increased demand for green technologies could create the perfect storm for a price surge. These past episodes provide a roadmap for understanding silver's likely trajectory. They also highlight a crucial takeaway. Silver thrives in the aftermath of chaos, but navigating its volatile phases requires patience and a clear strategy. The question remains, will you be ready to act when history repeats itself? Stay with us as we delve into the current investment landscape and explore how you can position yourself to capitalize on silver's long-term potential while managing short-term risks.
So Bitcoin was a trade we actually did about a month and a half ago, and it was simply because we had a really nice setup. We have this giant cup and handle pattern, also a giant bull flag pattern. And if you were to do the same, this is the monthly chart. If we were to do the same that we did with gold and the SP 500, you take the low, you take this high, and then you come over here and you take this low. It draws those targets where I expected Bitcoin. We ended up getting long Bitcoin right over here. We hit our first target at 618, which it actually paused there for about a week. This is a monthly chart, so you can't see it. And then we ran all the way up. We hit our second target at 107,000. And so it has now hit that 100% measured move. So now I believe, based on this 100% measured move, I think it's going to continue to chop around, trade sideways, or pull back deeper and kind of reset. So that's why I was saying in my video, I'm like, looks like the stock market, gold, and Bitcoin, they have all hit 100% measured move on the monthly charts. And it feels like a feeding frenzy. In Bitcoin, it was headline news, everybody talking 100K, everybody's buying it. Same with gold, everybody was bullish when it topped out, right when it hit our targets. And everybody's bullish on the stock market again here. Right? We have people calling for 7,000, 8,000 SP 500, which is way up there. But technically, it's hit its move and it needs a pause, I think, before it goes any higher, if it is to go.
The situation facing silver investors right now is nothing short of a paradox. On one hand, the potential for a market collapse looms large, with silver's price expected to plummet in the short term. On the other, this very downturn could create one of the most compelling buying opportunities of the decade. So how do you decide when to act? Let's break this down. Chris Vermeulen's prediction of silver falling to the $22, $24 range paints a bleak picture in the near term. For cautious investors, this scenario presents a clear warning. Jumping into silver too soon could expose you to significant losses as the broader market undergoes a correction. This is particularly important to consider if you're relying on silver as a hedge against other investments. Its price could drop at the very moment you need stability the most. Yet history and market dynamics suggest there's another side to the story. As we've seen in past crises, silver's short-term volatility is often followed by long-term gains. The metal's affordability, combined with its dual role as a commodity and safe haven, makes it uniquely positioned to benefit when the dust settles. Institutional investors often shift back into precious metals during recovery phases, and silver, with its high industrial demand, frequently outperforms. So where does this leave you? Timing becomes the critical factor. Some investors may choose to wait for clearer signs of a bottom, perhaps when silver approaches Vermeulen's $22, $24 target. Others might see the current period of uncertainty as an opportunity to dollar-cost average, buying small amounts of silver at regular intervals to mitigate the risk of further declines. Then there's the question of how to invest. Physical silver remains a popular choice for those looking to hedge against systemic risks, offering tangible value in an era of digital uncertainty. Alternatively, ETF and mining stocks can provide exposure with greater liquidity and potential upside, but they also come with increased volatility. Ultimately, your approach will depend on your financial goals, risk tolerance, and time horizon. Are you looking to protect wealth during a potential market crash, or are you aiming to capitalize on silver's long-term growth prospects? By the way, the key is to have a strategy in place. Before making any decisions, ask yourself, what role does silver play in your portfolio? Is it your primary hedge, or a small component of a diversified strategy? And most importantly, how prepared are you to weather the volatility that's almost certain to come? The investment dilemma facing silver is complex, but it also offers incredible opportunities for those who are informed and prepared. As we move forward, we'll explore actionable steps and strategies to help you navigate this uncertainty and emerge stronger on the other side.
I think so. I mean, look at Warren Buffett. I mean, he's been dumping shares and liquidating, and a bunch of other big investors have been dumping real estate, and BlackRock's trying to get out of real estate. They own like half of America's real estate, and they're selling properties at a loss. I think they see the end is coming, and nobody wants to talk about it. Nobody wants to spark the awareness because those big players, I think they're just covering it all up. I think the market is on the verge of a huge collapse. It'll be really good for gold and silver once it has that pullback and reset. But yeah, I think you're right. There's all kinds of ways to look at this market. I'm just showing you just the simple technical analysis, but there's a lot of layers, fundamental, economic, all kinds of stuff breaking down as well that support all this.
As we've explored so far, silver's journey through this volatile market landscape is far from straightforward. The potential for sharp declines, coupled with its long-term recovery prospects, has left investors with more questions than answers. But this is where you come in. What's your take on silver's future? Do you see it as a risky short-term bet? Or do you believe in its ability to emerge as a powerful safe haven in the long run? We want to hear from you. Drop your thoughts in the comments below, and let's get the conversation started. And while you're here, take a moment to reflect on your own investment strategy. Are you preparing for the possible downturn that experts like Chris Vermeulen are predicting, or are you waiting for clearer signals before taking action? Engaging with others in the comments could spark new ideas and perspectives, helping you make more informed decisions. Now, if you found this discussion helpful, don't forget to hit that subscribe button and turn on notifications. By subscribing, you'll stay ahead of the curve with timely updates on market trends, expert insights, and strategies to navigate these turbulent times. Your support not only keeps this channel thriving, but also ensures you're always equipped with the knowledge you need to make sound financial choices. And here's a question to think about as we dive into the final chapter of this story. If silver does hit the predicted $22, $24 range, will you have the confidence to see it as an opportunity, or will fear hold you back? Let us know your answer in the comments, and stay tuned as we break down the factors that could lead to silver's eventual rebound and long-term success.
Happens to be real estate market. I don't have a chart of it here, but the real estate market I follow very closely, and I think looking at residential real estate, the prices aren't really falling. They pulled back off the highs down to about 15 to 20% in most places in the United States and Canada, and they've been flatlining. They haven't been selling, but the stockpile has been building up. There are so many homes for sale now, but none of them are really selling because nobody wants to drop the price of real estate to what the actual market value is. People think, well, no, I want to sell it at a high price, but the real market value is below what everybody wants to sell. That's why they're not selling. So once retail homes, residential homes start to sell, then people are going to realize, oh my gosh, we've lost 100K, 300K, worth of house value. And then they start to get nervous. And then if the stock market starts to move down, they're like, oh my gosh, we're losing value in our house. We're losing our portfolios going down. That's, we need a piece of economic data. I look at real estate as economic data that it will create that tipping point where fear picks up and the masses are like starting to get nervous. They're not buying into the Magnificent Seven anymore. They're more so like, maybe we should be selling and let's move out, right? So, and this is a window. When this happens, we could see gold, silver move slightly higher for a month or two during this. The stock market and real estate could break down and people will move to gold and silver. And I think they'll move higher. Maybe not huge, but they will be, I think they'll hold their value at minimum, if not move back up to their highs that they had a few months ago.
We've journeyed through the complexities of the current market landscape, from the ominous warning signs of a potential collapse to silver's unique role as both a liability and an opportunity. Now it's time to bring it all together. Chris Vermeulen's analysis points to a sobering reality. The financial markets are on the brink of significant upheaval. Key indicators like the 100% measured move in gold and the stock market, coupled with institutional sell-offs and economic slowing, suggest that a correction isn't just likely, it's imminent. And silver, despite its reputation as a safe haven, is not immune. In the short term, Vermeulen forecasts that silver could fall to the $22-24 range. This prediction aligns with historical patterns where silver, tethered to industrial demand, often bears the brunt of market panic. However, this isn't the end of silver's story. It's merely a chapter. Once the initial shock subsides, silver's long-term potential shines through. Its unique dual role, serving as both a commodity critical to industries like green energy and a hedge against inflation, positions it for a strong rebound. With central banks signaling sustained monetary easing and geopolitical tensions adding to uncertainty, the conditions are ripe for silver to reclaim its status as a go-to asset for investors seeking security and growth. For those prepared to endure the volatility, this predicted downturn could be a rare opportunity to buy silver at historically low prices. Dollar-cost averaging, allocating a portion of your portfolio to physical silver, or exploring ETF and mining stocks are all strategies that could pay off as silver begins its recovery. But let's not lose sight of the bigger picture. A market collapse doesn't just test portfolios, it tests resolve. Will you have the confidence to act when others are paralyzed by fear? Will you recognize the opportunity hidden in the chaos? This is the moment to plan, to prepare, and to make informed decisions. As always, we remind you that this isn't financial advice. These insights are tools to help you navigate an uncertain future, but the final decisions are yours to make. If you found this discussion valuable, don't leave without subscribing. Staying informed is your greatest asset in times like these. Turn on notifications to stay updated on silver's progress, market trends, and actionable strategies. Together, we can turn uncertainty into opportunity. So is now the perfect time to buy silver? The answer lies not in the metal itself, but in your ability to see its potential amidst the chaos. Stay prepared, stay informed, and remember, the greatest rewards often come to those who act decisively when the stakes are highest.